news that TVS Motor will be acquiring the remaining 25% stake in the e-mobility group SMEG, which is the Swiss e-mobility group. They had earlier 75%, now they'll acquire. So SMEG will become a wholly owned subsidiary and they're paying 180 crores for that. You know, I'd met Sudarshan Venu at our IBLA show last month, and he was saying he's going big into the electric vehicle space, and SMEG does a lot of B2B and B2C EVs. So now, you know, they're just sort of cementing their position in that space. Okay,
well, new highs for the stock, 1383, 1384 is where that one is at. Hiren Vaid is now joining us. He's a market master of the day, Chief Executive Officer, Director and Chief Investment Officer at Alchemy Capital Management. Hiren, good morning. Good to have you with us here. Thanks for your time. You know, I just want to start with your view on mid-caps and small caps, Hiren. You know, 20% on small caps last 2 months, 17-18% for the mid-cap space. We had someone like Lawrence Belanco, purely chartically speaking, saying, well, he's projecting much more gains here, while he thinks large caps will be ranged. What's your view on this space and what's likely? It's a very varied space, so we'll have to, maybe if you're okay with it, talk bottom up as well. But first, a top-down view. After the run-up that we've had, what's the view?
So, Prashant, thanks and good morning to all your viewers. Thanks for having me on the show. I think the small and mid-cap space went into a long consolidation correction phase from October 21 right up until March of this year. And I think what was ailing the sector last year was the fact that we had a big impact on, if you look at the non-financial companies in the BSE 500, if you look at the 420 non-financial companies, last year in the first 3 quarters, you had almost a negative 550 basis point contraction in EBITDA margins because of rise in commodity costs, energy costs, power costs, logistics costs, right? So there was a negative operating leverage as far as earnings was concerned. And you also had rising rates, which means that typically small and mid caps don't do very well when rates are rising and cost of capital is rising. So you had a double whammy in terms of negative operating leverage on earnings plus some contraction in PE multiples. But I think if you look at the fourth quarter numbers that the earnings season just got over, I think broadly the non-financial companies have clawed back about 150 basis points of those margins back, with a combination of the fact that raw material prices have started to soften and companies may also have taken some price hikes. And I do believe that this trend will continue into Q1 and Q2 as well, because we are not done. I think commodity prices continue to soften, and I think the full benefit of that will flow through into Q1 as well. And I think broadly it would be safe to say that we are almost towards the end of the rate hiking cycle, right? So I think the combination, what ailed this, the small and mid caps last year is actually likely to be a tailwind this year. And there is no doubt that the breadth of performance has improved and the breadth in the market has also improved substantially. So we are very, very bullish on small and mid caps going forward from here. You know, I think this is just the first leg of re-rating after a long consolidation and correction.
All right, this is the first leg of re-rating. So within mid-caps and small caps, Hiren, where do your preferences lie? There are many pockets that have already delivered great returns, right? We were just talking about the auto sector, stocks like TVS Motor hitting fresh lifetime highs. We were speaking to a management that's in the defense space, and he said that, you know, orders are coming in thick and fast. But these are spaces that have already run up. Where do your preferences lie now?
So, Sonia, I think if you look at a slightly longer term view, our view is that the sectors that did well in the bull market of 2003 to 2007, right? Capital goods, infrastructure, defense, manufacturing, autos, auto ancillaries. I think very similar to that, we believe that these sectors will come back in favor. They have gone through a long phase of consolidation where nothing happened for the last 10 years. We had a lost decade of manufacturing in India between 2010 and 2020. And now I think that there is a regime change that we see, and we believe that broadly manufacturing, but a lot of these sectors that I spoke about will likely lead in the next bull market rally. And I think the interesting thing is that in the small and mid caps, you can find a lot of companies, whether it is in defense or capital goods or power or EPC or infrastructure or cement or manufacturing. I think you will see a lot of action in those sectors going forward from here.
All right. Hi, Hiren. Just hold on, Hiren. We're seeing a couple of large trades, actually. Man Infra as well is seeing a big trade that's taking place out there. So this morning, a couple of large trades being seen. Man Infra is the other one. Fair, I think, a few lakh shares actually have got traded in the last few minutes. Maybe we get the block deal alert. It should come up for you on the screen. Well, Hiren, the markets in at least FY24 so far, we're only 2 months into it. The mid and the small cap portfolios are feeling quite good. Towards the end of last year, you'll ask a lot of retail audience out there, they'll be like, hey, we don't care if the markets are at 17 or 18,000. Our portfolio is more like 14, 15,000. What's your view, though, on these new age themes? Some of them have come back pretty well, though, stocks like Paytm are still a third of what they were at the IPO price. Would you look at them, or there are much better opportunities, like you're talking about manufacturing, defense, etc.?
So I think, I think earlier in your show, I did mention that late last year, in fact, we did make some investments because that to us was the most hated end of the market, right? From being the darlings in 21, these stocks had corrected massively. And as you know, that valuation swings on both sides. And we got some great entry points in not all of them, but some of them last year. And now I think we are seeing that as these companies are hurtling towards profitability and focusing on not wasting capital in too many areas, we think that over the long run, there is still money to be made. But the problem in this area or in the new age sector is that there will be continuous supply of stock from existing investors who may be wanting to get out. And that's fair. And therefore, you need to be very careful while trading into this sector. But we do believe that, 3-4 months ago, the valuations were very, very reasonable. And there was a good entry point into some of these companies.
Hiren, what are the what's the not new but themes that you are now really excited about, apart from what we've already spoken? One is I'm starting to hear power more and more. Things like pump storage within power is a theme, and some stocks likely to benefit disproportionately. What are you focused on?
So Prashant, for example, yes, I think power will do well. Our framework doesn't allow us to end up buying the end power utilities, but through the value chain, there could be a lot of opportunities. I think an area of opportunity that we are liking now is that, there were certain areas of discretionary consumption that didn't do well, right? I mean, consumption just fell off the cliff after Diwali last year. And trends have been very, very soft. And those stocks haven't done that well. And I think from a risk reward perspective and slightly longer term, while manufacturing and capital goods and defense are all at highs, and that's a structural story, I think some high quality QSRs or consumer discretionary companies or large box retailers, which haven't done much for the last couple of quarters, I think that there is an opportunity that we see there, and we are adding our exposure there because that's where the demand softness is already reflected in the stock price. But I think that as the economy does well and as inflation comes down, consumer buying will come back. And therefore, in some areas of discretionary consumption, we see an opportunity where stocks haven't done well over the last couple of quarters.
Is there more scope in spaces like real estate? I ask because, you know, many of these names, whether it's macrotech developers, prestige estates, are already at fresh 52-week highs. And the demand over there has been exceptional too. More scope here for stock market investors in real estate companies?
Oh, yes, Sonia, I think we don't have exposure to real estate, but I think, real estate will do very well. That's a sector, again, which I mentioned is part of the earlier block where it did very well between 2003-04 and 2007-08. And I think that will repeat itself. And there are several ways to play that. You could either buy home improvement companies, or you could buy housing financiers, or you could buy cement companies, right? Or you could just straight away buy real estate. So it really depends on each investor's objective. But on the whole, I think this is a sector which will do very, very well.
All right, Hiren, any view on the pharma space? Here, select stocks have come back in style. It had a lull for close to 5 years, the headline index. But in the last year, the recent past, we've seen some bit of outperformance from a couple of these stocks. Case in point being a Divi's laboratory at around 2,601 was looking at it. Suddenly, the numbers showed some bit of sequential improvement and the stock is off to the races. Anything looks good from there?
So I think, Nigel, pharma is a pretty tricky sector. There are the API manufacturers, and then there are the generic companies, and then there are the CDMO companies. So it's a pretty varied opportunity set. It's difficult to take a call on the entire sector as a whole. But again, I think you will have to be very, very stock specific there. Our focus in pharma has largely been on the CMS and CDMO space, where we think that these are businesses which are less cyclical, less prone to generic price competition, and these trends are fairly secular. So we like companies like Syngene, for example, which we've been holding in our portfolios for a very, very long period of time. And so you have to be picky and choosy in the pharma space. But I'm sure there are opportunities here as well. There were a lot of dislocations during COVID. They did phenomenally well. There was a part of the business which was almost one time during COVID, and then after COVID went, there was a high base to reckon with. And after that, we've seen a lot of these companies really correct because of higher raw material costs, falling margins, and those one-time revenues could not be repeated. I think once the base gets corrected, then probably it would be a good time to look at some of these companies. But as I said, we've been more on the CDMO side, which is more secular.
Right. I think we lost the line there with Hiren. We'll try and have, we'll try and have him back in just a bit. Is it the rain, Sonia? I don't know. We're in the studio, so we don't know what's happening.
You can't blame everything on the rain now.
It's cleared out quite a bit.
Okay.
So in the next 2 months, if you reach late, it's the rains. If something goes wrong with your network, it's the rains. Good excuse.
Why not?
But today on the way to work, a lot of schools have restarted.
Yeah.
The non-IB schools in particular. So nice to see some of those kids with their
raincoats,
gumboots. I mean, it is lovely.
Absolutely. Well, we'll have, I don't know if we'll have Hiren back, but we'll try and establish that connection once again. The market has seen a bit of a yo-yo kind of move. We started up strongly. We fell into the negative territory by about 2 or 3 points, and we are back up about 40 points. So already, a strong start into the negative, all of that gone, and then back up 50 points. Not quite to the high of the day, which was the opening level, but almost there on the index. 18,600 is where we are at. Just a few, SRF, by the way, is selling off a little bit more. I think there is exports data which has come through, which shows that SRF's numbers don't look very good month on month and year on year. Maybe we'll try and pull out those numbers in a bit. We've got Container Corporation, I think I highlighted this, 2% lower. Naveen Fluorine is another one, which is down about 2% or so. And Varun Beverages, which is such a large winner, is seeing a cut of about 2%, 1560 on Varun Beverages right now. So that's the market for you. 35 points on here for now.
Okay, so for now, I think the market is just sort of ambling in this range, right? Very flat, but with a little bit of a positive bias. So let's see how it goes from there. Surprise, surprise, IT stocks are back in a big way. And actually, Sonata Software is the stock of the moment. After very positive commentary from the management, the stock is up another 3%. But NLC India is the next corporate on our radar. Well, as we know, NLC India is into power generation and, they do solar power, renewable energy, etc. So we'll talk more about that. Prasanna Kumar, who's the chairman and managing director at NLC India, joins in now to discuss the outlook for FY24 and how the pricing picture is looking like in the power space. Thank you so much, sir, for joining in and appreciate your thoughts on the channel. Let's start by asking you how the power sector climate is at the moment. What are the demand trends looking like? What are the pricing trends? You have some plans to scale up your capacity by 2030. So tell us a little more about that. What's the kind of capex that you have incurred already?
As on date, the power sector is growing like anything. It's almost increasing at a pace of almost 9%. And it is further going to increase, Particularly, our per capita consumption is very low compared to the world's average. So there is a lot of scope for improvement in the per capita consumption. So the electricity demand is bound to increase by at least 9 to 10% every year. So as on date, the energy peak megawatt requirement is around 2,20,000 megawatt. But this is expected that this will reach to 3,40,000 megawatt by 2030. And the capacity addition also as on date around 4.1 lakh megawatt installed.
Okay.
Okay, there's some issue actually with that video. It's sort of freezing for now. We'll get back to you, sir, in a bit. It is a rain. It's a monsoon. What's going to happen when it comes in full flow? These are just the initial days.
Just kidding. But we'll try and have that line fixed. That's an interesting and important management which we don't hear from very often. I think almost $100 on the stock price as well. The low, I remember in COVID, was about 50 rupees. So, of course, compared to other sectors, large sectors, it's not done as well, but it's caught a bit of a bid over the last couple of months or so. So that's Neyveli Lignite. Maybe a few stocks on the upside while we wait for the Neyveli Lignite management to join us. Look at Suzlon, which is up 7% now. So Suzlon is back in momentum. At about almost 15 rupees now. But I think, Sonia, we have the management back with us.
Yes, Mr. Prasanna is back with us on the phone line, though, this time. Sir, thanks for being with us. I think there's some audio issue, so we've got you on the phone now. You spoke about a 9% growth in the power sector overall. But can you tell us about your own business? What kind of growth are you seeing for NLC India? What are the tenders that are expected to go through in FY24 itself? And what's the capacity addition that you're looking at?
Madam, we are as on date, we are having around 7.5 gigawatt installed capacity. We are aggressively adding the capacity both in thermal as well as the renewable capacity. By 2030, we want to be a 18 gigawatt company, adding around 6 gigawatt in renewable and around 8 gigawatt in the thermal and lignite based power generation. At Ghatampur, we are having 3 to 650 megawatt units, which are expected to be commissioned in the current financial year. They are in the advanced stage of commissioning, and the first unit is expected anytime in the second quarter of the financial year. And after that, in the current financial year, we will be adding this 1980 megawatt. At the same time, we are in the process of awarding contracts for ultra supercritical power station of 2,400 megawatt at Talabira in Orissa. That is near our Talabira mines. Also, we are having.
Yeah, Mr. Kumar, Mr. Kumar, I just wanted to focus on a couple of aspects which, from a stock market perspective, will be interesting. The regulated equity. Now, for the thermal power project, NLC, you're moving from around 3,600 megawatt to around 8,200 megawatt. Also in your joint venture portfolio, you'll move from around 1,000 to close to around 3,000 megawatt. Now, and for this thermal capex program, you have allotted close to around 45,000 crores. My question to you is, what is the current regulated equity? And post this expansion that you've laid out, what will the regulated equity go to?
See, the total capex requirement for this, the entire requirement is around 75,000 crores. So that will be up to 2030. So these 75,000 crores are required for this thermal capacity as well as the renewable capacity.
What is the regulated equity, sir? What will it go to?
The regulated equity is around 10,000 crores.
Okay, and post expansion it goes to?
It will go to around 22,000 crores.
Okay, all right. Can you tell us what are the outstanding dues at the moment from DISCOMs, and what is the collection efficiency looking like?
Madam, as on date, the outstanding dues are around 4,000 crores. There is a lot of improvement after the government scheme of addressing the outstanding dues. The traffic portal monitoring, all these things helped a lot. So as on date, our outstanding dues is around 4,500 crores. And last financial year, we could achieve 90% collection efficiency. And even these outstanding dues are also on account of the Ministry of Power policy of spreading it for 48 installments. Otherwise,
so this 4,500 crores, Mr. Sure. This 4,500 crores outstanding dues, it compares to what? What was it about a year ago?
It was a year ago, it was almost 9,800 crores, madam. Now it is almost half, almost 4,500 crores. And we are regularly getting the payments from the state electricity boards.
All right, Mr. Kumar, we've got you a little of a scratchy line, but let's try to squeeze in one more point. Your lignite capacity, you're looking to enhance it from around 32 to around 40 million tons. Coal capacity from 20 to 44 million tons. Capex for this is more than $1 billion, I think 8,500 crores. Could you give us only the timelines? When is this expected to be completed for lignite and coal?
Coal already we are producing around 10 million metric ton. This has to increase to 40 million metric ton. Our Talavera power station, the Talavera thermal mine, that is going to reach its peak capacity in next 3 years. So after that, it will reach its peak capacity of 25 million metric ton. And along with that, we are aggressively moving for the commercial mining also. So we are anticipating another 15 million metric ton addition through this commercial mines, which we are trying to get.
Okay,
and
right,
the lignite capacity will be increased by another 10 million metric tons with our mine 3 that is coming up in the Nai Valley area.
All right, Mr. Kumar, thank you very much. I wanted to talk about, in your investor presentation, you say the next leg of growth will be you're investing into pumped storage, and I wanted to talk about that, but maybe for another conversation. We're out of time, and we hope you come back and we can sort of pick up on that as well. But interesting as always to have you with us here on CNBC-TV18. We'll take a quick commercial break here. We have Vivek Sarogi, Managing Director at Balrampur Chini Mills, joining in to discuss the outlook for sugar prices and how's business looking, both on the sugar and distillery side. That's an interesting chat as always. And a little after that, we'll have the management of Healthcare Global Enterprises joining in for a business outlook conversation. Stay tuned. Welcome back. Well, this is Corporate Radar, and our next conversation is with the largest sugar manufacturer in the country, Balrampur Chini. Lots to talk about. Vivek Sarogi is Managing Director at the company, and he's joining us right now to take some questions. Mr. Sarogi, good morning. Great to have you with us here, sir. Prashant, this side. You know, business has been great, both on the sugar side, distillery side. You've had a good last quarter, good year as well. And prognosis is that things are looking better. I want to sort of get something slightly tangential out of the way before we get into the business aspect of things. We've seen this is a politically important year as well, and then next year we'll have the general elections in 2024. Recently, of course, the Karnataka state election outcome came through, in which we had an upset. The incumbent was out and Congress is back in power. The manifesto and what was spoken about pre-elections while campaigning, etc., was that the intention to increase state-administered prices in Karnataka. Karnataka is one of the three large important sugar-producing states in the country. What is the risk of this manifesting in other states as well, in Uttar Pradesh, which matters for you, as we head into other state elections and then into the general elections in 2024, sir?
Morning, Prashant. So this question is but obvious the moment you lose a state election. If you see the conduct of the UP government, and if you see it over years now, I think we've been 6 years with the Honorable Chief Minister, who's currently there. So there has been a very defined trajectory to cane price increase. It is tepid. It is dealing with reality, and nowhere has it shown any spike, even in the previous elections. So if we see the central government elections of last time, which 2019, in that year, the cane price was not raised. There is no evidence in history in UP of this sort. So one event of another state down south impacting cane price in UP, I would not even, sort of start to correlate it with the pragmatic CM we have, who understands grassroots reality.
Okay, so no risk of that showing up in other states as well.
I'm not saying no risk. I'm saying that's how I see it.
No, absolutely. I got that, sir. Let's get to weather then, sir. What is, again, I'm asking for your opinion. The IMD is now saying that we will see this El Nino weather phenomenon for, most likely. The chances of that are much higher. How is this likely to play out? How is, this kind of weather phenomenon played out in earlier years for you? What is the impact on sugar prices likely to be? Your assessment. I'm sure you're watching this closely.
So if we see El Nino, this is the first year, and El Nino conditions do last when they come. It is not a one-year phenomena. So that's something to be kept in mind. Two, for the current year, I don't think the IOD is saying a bad monsoon. The Indian Ocean Dipole, that is not yet signaling a monsoon which is going to be bad. However, the current weather conditions do indicate that life is not be as usual. So what's needed for sugarcane, at least I'll tell you, it's not the quantity of rainfall. Let's say 100 meters or 100 cm is the required rainfall in a year. So you get 95 cm or 105 cm, that doesn't matter. It's how well the rainfall is distributed and at what intervals. So that's one. Two, yes, one can be a little cautious thinking of this, but the current year's production, now I'll come straight to production because that's what will impact the industry. If we were at 33 million last year, and UP, with the level of groundwater, I don't see much impact in UP. If at all, there is some lurking danger, it might be in Karnataka and Maharashtra. Even then, I personally don't see, but too early again. Let's say production comes down to 31 or 32 million. Your export quantity gets tempered. Nothing happens to the, sort of domestic market, or the availability thereof is not curtailed. So two things. One, whatever cane is there, first, you divert for ethanol and sugar. Whatever extra production goes for export. So I do not see any danger to the ethanol program because cane is far, far ahead of that. If at all, the exports may be cut. If you see how the central government has behaved, and they put a formula in place, after keeping for a domestic stock of 6 million, as on 1st October every year, the balance will be exported. Now, one can definitely say the export next year might not come in one tranche, it may come in two tranches because there is election, and that I would agree to would be a very responsible action. So
Sure.
I don't see a daily, movement or, daily guessing the monsoon. Just wait for a bit.
Okay, Mr. Sarogi, good morning. This is Sonia here. So just to follow up, since we're talking about ethanol blending, can you give us the latest stats? Where are we in terms of the roadmap for ethanol blending for the industry as a whole? How is it shaping up so far? And for Balrampur Chini particularly, what are the numbers looking like?
Yeah, morning, Sonia. So the ethanol blending currently target is about 12%, I think, and government should be able to achieve 12%. So what the government is doing, they are now opening E20 pumps. So I believe by the end of the year, maybe the country would have over 1,000 E20 pumps. So that will increase the blending. The industry is in position to supply. Even the grain people have tendered a reasonable quantity. So this year, probably we could achieve 12, then 15, and then 20 maybe. As far as Balrampur goes, our quantity, we should be able to supply about 29-30 crores total, including what is required for the state government.
That's 29-30 crores of supplies for FY24 is what you're saying.
Sonia, I do it season-wise. I mean, we'll get back to you.
Yes.
All right. Mr. Sarogi, on the ethanol side of things, last year you supplied what, 21 crore liters? Is the number approximately that?
Maybe, Nigel, yes. So our distilleries have been commissioned.
Okay. And what is your total capacity, sir, post this expansion?
35 crores.
35 crores. So you get to 35 crores by FY25?
Next year. Again, I'm talking season. So I'll tell you why. Because our crushing this year is about 10 crore 30 lakhs, which is a 15% increase. Our recovery is also up by a bit. Next year, we are hoping to crush another at least 10% more. So if we get to about 1130, and conditions right now do indicate that the figure I'm telling you should be possible, then the ethanol level, because of the availability of molasses and juice, will be much higher. Therefore, we should easily be able to get to, closer to 35 with grain, but on the season.
So what's happened also as an outcome of this perhaps is that your borrowings have gone up because of obviously the expansion that you're doing in the distillery segment. So I get that. But how much are you comfortable with in terms of, pressure on the balance sheet, perhaps higher borrowings, higher debt? What's the level that you're comfortable going up to?
We are at very comfortable levels. In a year from now, hopefully, you'll again see us back to our traditional levels.
Okay, which is what?
Whatever we've undertaken is cash accretive on day one.
Okay.
So we continue. Yeah. Sorry if I may just complete. We continue to maintain our dividend protocol as well as buyback. So it's rewarding the shareholders in an age-old fashion, traditional fashion, which Balrampur has been following for 5-7 years, very credibly and it's very defined. And the debt does not trouble. So the company has cash to meet all obligations, and if at all, go for new business if there is ample opportunity.
Mr. Sarogi, you started when we began on the weather topic. You began by saying that when this El Nino phenomenon occurs, it lasts. It's not just 1 year. I mean, it stays. Conditions stay. So in what way should we be cognizant of this? Because this is not just this sugar season then. You're saying that it should not impact that much, maybe export quota. But if this, as you're saying, this lasts a few years, what's your thinking?
So that's a very good question, Prashant. So if at all now, the trajectory and the underlying, if I may say, the underlying theme moves from maybe neutral to positive. So sugar prices definitely will take a firmer tone as we move ahead. Because the fear of surplus is now receding definitely. And if India was supplying about 10 million, 6 million to the global markets, and India gets down to 3-4 million, the global markets will also remain very firm. Thailand is also having it. So El Nino is a phenomenon which is all prevalent. It's not just India. So if these risky weather patterns do emerge, the tenor becomes a little more bullish overall, long term.
Got it.
Okay, Mr. Sarogi, thanks so much, sir, for stopping by. Always good hearing your thoughts. Thanks so much for stopping by and wishing you a good day and looking forward to having a chat with you in the near future.
Same to you.
Well,
Thank you.
Well, time to move on and invite our next guest, Healthcare Global. That's a stock on our radar. The stock is near a 52-week high. There have been some recent large trades on the company. Now, on June 1st, the promoter entity, well, they sold close to 35 lakh shares, and CVC, the other promoter, bought that part from them. Last year as well, there was a similar transaction. To discuss more on these developments, we're joined by Mr. Ajay Kumar, the chairman and CEO of the company. Hi, Mr. Kumar. Good morning. Thanks so much for joining in. What's going on here? You know, Mr. Ajay Kumar, we have been seeing a lot of PEs exit businesses. But in your case, they want a bigger chunk of the business. After buying in the early hundreds, then in the mid 200s, and now at 300 as well, they are increasing stake. Now, your stake has been coming down. My question to you is there, a targeted holding between both of you all? I think your holding would be down to the low teens. Do you look to sell more, and will CVC take a bigger chunk? Is that the plan?
No, I think in a way it's between the promoters, exchange of shares shows the confidence we have in the company. And the only reason for me to take some liquidity is because as a promoter, in all the 30 years or so as a founder, I have never taken any liquidity from my shares. I'm also, age of 71. So I thought it is good to take some liquidity of having worked all these years. And who is better to take than your own co-promoter? When the promoter obviously shows more confidence. It is not like any insider selling. It is like insider to insider. So that is how we it should do. And it also shows that a PE has got that kind of confidence in our company, which is very good. And we are very proud of that, what is happening.
That's very good news, then. You've explained that, but will you want to raise some more liquidity, say bring your holding down to around 10%, or are you done now? You've raised enough liquidity that you want, and
I am done at this for the near future. I'm done. I think that's it.
Okay, Mr. Ajay Kumar, good morning. And I completely take your point. I mean, you worked so hard all your life. At some point, you'd perhaps want to enjoy those spoils as well. Got it? And kudos to you for that.
I always say in a very light-hearted way to my family, you don't want to go to your grave holding all the shares and not having any liquidity. So it is important to have some liquidity.
Absolutely. I mean, what's the point of making the money if you don't spend it, right? I got that. But I guess for your shareholders, what they would want to know, and as Nigel was also asking you, currently I think you have about 12-13% of stake. Would you at some point look to exit entirely? Or would you bring it down further in the near future, maybe 12, 18 months? No, anything at all on the cards?
In the near future, I have no plans to dilute myself further. I think I have enough liquidity to do some of the things. I do a lot of rural work, NGO work, and I want to put the money to some of this use. I have a lot of work going on in leadership training, women training, so I'm going to use some of the funds for that. That is the whole idea behind it.
Okay. All right. Mr. Ajay Kumar, then, and kudos to the business that you're running as well. Cancer has been such a disease, and, you would have treated so many lakhs of patients as well out there. So best wishes to you and your team on that aspect. But since we're talking about it from a stock market perspective, what is CVC's ultimate goal? Now, they got in at around 120 rupees odd. They bought some stake from you.
They got it 130.
130, all right. But what is the ultimate goal? Valuation-wise, you're still trading at a bit of a discount in comparison to the larger names. Do CVC, after 3-4 years, do they want to get out of the business at some valuation? Do they have a time horizon, 2025 or something?
No, not to my knowledge. They are there for a longer period. Obviously, at some point, they will exit, but I don't think they have any plans in the near future. Of course, they are the best persons to talk about it. I may not be the right person. But as a co-promoter, I can say that it has been a very healthy relationship. Working with them has been phenomenal. Even though in the beginning I had some doubts, I think it has worked out very well. Mutual respect, and we believe the growth strategy we have put together is phenomenal. And the way I see it, you mentioned about the valuation and all, even though we don't give numbers, we are on an upward trajectory. when we look at our stock, which is a little bit lower in the valuation times the multiples, as you call it. But I think the future looks very robust for us. So that is where we see the positive impact of HCG's growth. And as we all know, cancer unfortunately is increasing. And we are positioned very well for this in terms of not only in big cities, but also in tier 2, tier 3 cities. With this kind of a positioning, we are well versed to grow for the growth.
Okay, can you help us with some numbers, Mr. Ajay Kumar? You know, if you look at the occupancies, right, they were absolutely flat in the quarter gone by. I think you're sitting at 65% occupancy. Why hasn't it picked up quarter on quarter? And on the chemotherapy itself, I think 37% of your sales came from chemo-related, procedures in FY23. How much do you think it could grow to in FY24?
I think we are looking at growth in the mid-teens, 15 to 18% growth. And regarding the, occupancy, as I have always said, occupancy is only one arm of oncology, because a lot of the growth happens footfall, depends on the footfall, because majority of the care is outpatient, whether it is chemotherapy, radiation. In fact, radiation is where our growth is happening significantly. And we are putting in second and third units in places. Like, for example, in Mumbai, we are putting in a second unit. So also in Jaipur, third unit, we are putting a second unit in place like Ranchi. So a lot of activity is happening on the existing centers' growth. And also we are bringing in more technology. For example, when you bring in robotic surgery, the average length of stay in the hospital actually comes down. Even though your revenue may be higher, but the average length of stay comes down, because from 7-8 days surgery, you're now sending the patient home in 3-4 days. So these are all the changes which are happening in the medical field, particularly in oncology. There is more targeted treatments, immunotherapy, all of it are outpatient. Tablets are now replacing injections. Yes. So this dynamic change happening is only going to produce better results for the patients. Our focus is on patients, obviously. As an oncologist, I started it because focus on patients. Obviously revenue and all will follow, and that is what has happened.
Okay, very quickly, sir, the fertility revenue, do you want to scale it, or could you look at selling that business very quickly?
Now we are made some changes to scale it significantly. Okay. And at some point we'll divest, of course, and at the right time we will announce it, but not right now.
Okay, all right. Thanks so much, Mr. Ajay Kumar, for joining in and filling us in with all those details. Wishing you all the best. For the time being, slip into a short break. On the other side, Mitesh Thakkar is waiting for us to give us some technical picks.
Welcome back. It's such a quiet morning of trade. The bank nifty has actually slipped a tad bit into the red. So let's get Mitesh Thakkar now on board. Mitesh, the headline index is not doing too much, but there are plenty of stocks in the broader market. Zomato, for example, is at a fresh 52-week high. Defense stocks are once again climbing. So what is it that you like and how are you positioned on the index?
Yeah. So I would agree with that, Sonia. I think the indices in the short term, I think, are looking that they will get into some kind of a contracting mode. Therefore, trading the index may not be a good idea. Maybe around 18,500 if you can get into Nifty, take a 50-point stop loss, take a long for the markets to come back from the lower end of the range to about upper end, which is around 18,650, 670. So that kind of trade can be taken, but then you'll have to wait and wait it out and then play it tactically. But a trade with the broader bias on the stock side, I think that's where the action is. I have one buy and one sell call right now. On the buying side is Gokuldas Exports, another mid-cap stock which is making a fresh high today. That's a buy with a stop at 464. Look for targets of 494 here. And LIC Housing Finance is something which might correct a bit. So have a negative call here with a stop at about 372. Sell this for targets of around 353.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's turn our attention away from the equity market to the commodities market. Manisha Gupta is joining in to tell us what's going on there. Manisha, morning.
Thank you for that, Nigel. Well, I'm looking at the precious metal prices because this is one area that started the day on a positive note but doesn't seem to be holding right now because the dollar index seems to be rebounding. We are trading in the positive for dollar index and many of the commodities and other tangible asset classes also are under pressure because of the kind of week this is with so much data coming in. But as you can see, the gold prices after hitting 1960 in the earlier Asian trade have continued to see a decline. We did see prices post a second weekly gain and the best weekly gain in 1.5 months. Silver as well is now trading at around 2-month highs. We saw silver as well post the best weekly gain in 2.5 months, but the markets seem to be slipping off at this point in time. The support clearly comes in from the fact that we have seen weak US job claims data. The number that we've seen coming from China also has been on the weaker side. And then the kind of, stress, tension, escalation between Russia and Ukraine also were supportive factors for gold and silver prices. Until time in this year, we've seen a range of $2,051 to $1,810 an ounce on the lower side. We seem to be trading somewhere in the middle at 1960 on your screens there. There also is 1939 to 1990 of a range that the gold prices have seen in past 1 month. So a break on the lower side or on the higher side is what the street is anticipating by the time we end this week after all the monetary policy meetings are done with. If you look at the global markets now, it is about 72% chance of a Fed pause in the month of June. But there also is a 67% probability that you might be looking at a 25 basis point rate hike for the month of July. And that's exactly what the street is working with. The global ETF markets have been giving some support as well. For last many months now, we've seen constant inflows there. For the month of May, $1.7 billion of gold ETFs were bought. And this was a third straight month of gains or inflows coming into the market. Within Asia as well, it has been about China and India, which have seen net buying when it comes to ETFs. The China also has seen gold reserves gain up by 7th straight month to nearly 67.27 million ounces. This is one country that hasn't seen any redemptions at all. Russia is another one, Uzbekistan as well, which have seen gold reserves continuously seen in sense of buying. Prices below 1960 is where we are looking at ahead of the key central bank meetings there. So you have the US Fed meeting, which is on 13th and 14th. 13th is also the US inflation data that comes in. European Central Bank meeting is on 15th of June. And then you have Bank of Japan on 16th of June. So starting from 13th, it's a constant deluge of data that would be coming in. This is what the markets are anticipating in sense of gold prices going forward. Citi looks at 1965 of an average. That is exactly where we are trading at. Metal Focus believes that 1890 on the lower side could be an average, especially with the fact that the July also could see a rate hike there. But then you have more bullish cues coming in. You are looking at 2000 to 2050 as an expectation from Commerce Bank. And the latest Bank of America report says that 2100 is what they're anticipating by the third quarter of this year itself. So clearly all over the place when it comes to gold forecast.
All right, Manisha, thanks very much for that. So gold in focus now. Let's refocus on pharma names and the export data. Ekta is here with more on the stocks impacted and how. Ekta, morning.
Morning. Well, I'll start with, the positive news. It's positive monthly data which is coming for Lupin Syngene in May of 2023 on a month-on-month basis. So, for example, for Lupin, it's $67 million versus $41 million month-on-month. Syngene is $12 million in May versus $8 million on a month-on-month basis. For Lupin, in fact, this is the highest monthly shipments in May of 2023. For Syngene, the momentum is really led by Zoetis' animal health product. It's an osteoporosis product which Syngene has been supplying Zoetis for, and hence that is probably reflecting in the monthly shipment data. Now, coming to the negative news, we have Divi's Labs, which is generated on a Q1 FY24 QT date basis, which is till now what they've generated in this quarter. 89 million, which compares to almost 200 million Q-on-Q and versus around 250 million on a year-on-year basis. Loris is 38 million versus 138 million Q-on-Q and versus 128 million year-on-year. Remember, they did have the benefit of Paxlovid, which is basically the COVID-19 drug, which is tapered off or probably negligible in terms of quantity this time, so that's probably affected the numbers. Gland Pharma 37 million versus 82 million Q-on-Q and versus 80 million on a year-on-year basis. So basically the data does indicate that maybe it could be an overall flat performance for a couple of these companies by the time they close Q1 of FY24. Just want to point out with regards to this data, I've been speaking to a lot of industry people as well. So they have indicated that you have to take it with a pinch of salt because there are a lot of variables to it. For example, the pricing, the contracts, they all change once they do go into the area of export as well, or the geography of export for a lot of these companies. And hence there could be, the end result could be different from what we are also seeing.
All right, thanks a lot for that, Ekta. Well, the other stock that I'm looking at this morning is TVS Motor. It's sitting at a fresh lifetime high this morning. And the stock has had a dream run, right? I mean, if you look at it, it's almost a 30% growth that we've seen in 2023. Now, there are a couple of news points which are helping TVS Motor. TVS will be acquiring the remaining stake, 25% stake in Swiss e-mobility group, SEMG. Now, remember, TVS acquired about 75% stake earlier. They'll now acquire the remaining 25%. They'll pay 180 crores for the remaining 25%. And now SEMG will become a wholly owned subsidiary. Now, why is this important? Because SEMG sells branded e-bikes, which is electric bikes, from the manufacturers directly to the end consumer in various geographies like Switzerland, Germany, etc. So with this acquisition, TVS will be getting an entry into the global electric vehicle biking space, especially in areas like Switzerland and Germany. Now, this is SEMG is largely present in B2B as well as the B2C space. It has 30 retail stores across Switzerland and Germany, and it has close to $100 million of revenue. So, as we know, the big focus area for TVS Motor has been electric vehicles, and now they've cemented their presence in the global market as well. Let's slip into a quick break. On the other side of the break, our special segment, It's the Economy. Lata will connect with DS Pai of the Indian Med Department and GP Sharma of SkyMed to discuss the El Nino impact and the onset of the monsoon season finally.